Welcome. It's Tuesday, 16th January 2018. Time for our real-time daily trading days webinar, like every day to the same time. We will have 5 days a week, 5 different traders. Today it's Tuesday, so it's Paul's day. We will speak about trading ideas, strategies, market screening, and maybe one or two questions from you directly answered in this webinar. Our goal is quick and smart and every day, so 15 to 20 minutes is the goal. Let's have a nice start, and let's start like always with a risk disclaimer. Forex and CFDs are leverage products and can result in losses that exceed your deposits. If you are a starter in Forex and CFD trading, please start with a demo account and make yourself familiar by demo trading with the leverage and your personal risk management. If you like to see the full risk running, just visit one of our web pages like admiralmarketsglobal.com, for example, and you will see more described there. This is me. My name is Jens. I'm calling or sending from the Berlin office. My English is made in Germany, but I'm not the main speaker. The main speaker is our day trader. Today it will be Paul in a couple of seconds. This is our scheme. Yesterday on Monday it was Jay's day. Today it's Tuesday, so it's Paul's day. Tomorrow on Wednesday it's Mike's day. Thursday it's Nenad's day, and on Friday it's Dirk's day. Different traders, different trading styles. If your time allows it, just join us every day, and if your time don't allow it, every day visit our YouTube channel and you can see a couple of hours later the recorded webinar video there. Yeah, and if you like to trade Forex and CFD, we would be really happy if you do it with us. You will get many benefits only with Admiral Markets UK. For example, mini lots, not only for Forex, also for CFDs. Choosable leverage up to 500. You can choose if you like to trade with 50 leverage or 500 leverage. It's your choice. Many competitors just have a fixed leverage, not at Admiral Markets. All details about that, of course, also to find at admiralmarkets.com. Also some background regulatory information about our regulation. Admiral Markets UK Ltd is authorized and regulated by the Financial Conduct Authority, the FCA. And if you like to call us or send us an email, or you like to visit the YouTube channel, here you will find everything displayed. Enough from my side. Now it's time for Paul. Hi, good morning, Paul. What is your market view today?
Good morning, Jens. Good morning, everybody. I hope you can hear me loud and clear. I hope you can see the my screens as well. It's a glorious morning here. I hope wherever you are, it's glorious also. So it's our second week of the trading year. We've got plenty to get through as always. Things are starting to hot up. But for traders, that's what we want. So let's start very quickly with. I just want to talk about the talk about the trade we talked about last week in the DAX. Namely, we talked about having had a big move up, and then the trade idea last Tuesday was we were forming a sort of a double top here, and the trade idea was to have a sell order in there back towards the sort of area of kind of congestion we'd seen, and that kind of very nicely played out, and now we're having a little bit of few little swings there in the DAX over the last few days. That's not a surprise. It's probably with some of the situations happened in Germany. There's been a little bit of volatility there, but what we had was a big strong move up, nice kind of topping formation, double top and a roll down. So it was a nice trade, played out nicely, and I just wanted you to hold that in your mind because we're going to come back to that for a little bit later for one or two of our ideas today. One other thing that links into it is that last week we touched a little bit on the dollar index because, of course, for those of you who are completely new to trading, the dollar index has a very good correlation with the euro dollar. The dollar index represents the dollar against a basket of currencies of around about 58% of that is made up of the euro. So there's a real inverse correlation between euro dollar and the dollar index. This is the dollar index chart, and for those of you new to trading, you'll just see that I have a very simple chart. Okay, red bearish candles, green bullish candles, blue 20 period simple moving average, a red 50 simple, and a green 200 simple, and then you'll see me draw in a few levels of horizontal support resistance and a few trend lines. So last week what I talked about was I was interested to see on the dollar index were we forming a double bottom possibly. Was that giving us a hint of maybe the end of dollar weakness? Well, the rest of the kind of price action for the rest of the week kind of dispelled me of that notion. We fell right through the sort of the lows of 2017 already, and have pushed to these new lows here, and I'm actually just going to push down here onto the daily chart. You can see there yourself, we had some real strong dollar selling there, okay, Thursday, Friday, and yesterday. And today what we're doing is not unsurprisingly, there's maybe a little bit of a reaction. Not unsurprising, you know, it wouldn't surprise me if we had a little bit of a dollar strength for the session, just, you know, come up here and start to retest this particular area again. So just once again, hold that in mind, because it's going to play through into one or two of the ideas I'm just going to talk about lately. But hopefully I'm giving you now, there's a few pictures there that are starting to build that we can you know, utilize in our own trading. As always, just a very quick update, all right, on a few of my favorites. Last week, here we go. This is the euro against the sterling, one of my own particular favorites. Last week I said, you know, good trade ideas, they leap off the chart at you. If there's nothing going on there, well, then actually the best thing is to go and find somewhere where there is something happening. All right, euro sterling is still the same. It's still sat in that range. It's still just knocking about left, right, and center, and it really, for me personally, it holds no interest on it as a longer term trade at the moment. I don't see anything going on there. So when there's nothing going on, well, I'll go and look elsewhere for my trading action. We had euro yen, if you remember. We talked about you know, we had a sort of an ascending triangle, okay, or you know, in a sort of an uptrend. We had a breakout, and we talked about, well, you know, I'd like to see it come back and retest the actual breakout area, and in fact we actually came back a little bit deeper. We came a little bit deeper and just came back beautifully to that trend line that we'd drawn last Tuesday. Came back, touched it, and bounced up there. And I'll be keeping an eye on that. I want to see whether that kind of 134.50 level will hold. If it can, that would give me some you know, some interesting ideas about sort of getting long on it, or you know, we'll see it sort of move into a little sort of symmetrical triangle. So just keep an eye on that. So that's what we talked about last week. As always, remember what I talked about was the dollar index. Okay, the dollar index has been collapsing to new lows. Here's the euro dollar on the daily, and what's the euro dollar been doing? Well, it's been moving to new highs. I think I understand, having looked at the charts, that you know, yesterday we hit new highs that we've not seen for about 3 years or so. Okay, such has been the kind of the lack of movement in the euro dollar for many years here. Okay, we can see on the monthly chart here a little bouncing around here. But you know, we have had, as I said, we've had that dollar weakness, and that has come also at euro strength. And you can see there yourself, ladies and gentlemen, there's been a breakthrough. Those kind of 120, 121, we're up at, you know, up as kind of as high as, you know, just tickling the soft underbelly of 123 there. And I'll be interested to see if, you know, if we get a little bit of a reaction today. And that's what we're looking at. Remember what I talked about is that you know, we had that DAX trade. Okay, DAX trade of last week, we'd had a very long, strong move up. We then had a little bit of a double top, and then it rolled over and sort of moved back towards. There was a little bit of profit taking, a little bit of a weakening. Well, you can see, you know, exactly the same sort of pattern has played out, or is playing out on the euro dollar. We could look at that. It's unfortunately this morning it's already sort of looked to move there, but it wouldn't surprise me if we came back to sort of retest that kind of breakout level there. Okay, and I'd be interested to sort of have a short there with my short there about 122.50 with my stop above there. Okay, above the recent highs. What's that, about 122.87, 122.88, and then I'd be looking, you know, sort of to move back down towards the recent level of support there, or, you know, resistance, which now becomes support. And suddenly, you know, what happens is there we have a you know, a nice trade with a particularly good sort of risk to reward ratio, which is something we always like to look at. So there's one trade idea. As I said, the euro dollar, it's already taken that little bit of a journey, and I'll be interested to see how that goes. You know, what we have seen is, you know, there has been a lot of euro strength, so I'll be watching that like a hawk. But you know, what I wanted to talk about was, you know, pound against dollar. All right. So remember what I've been saying. We've had dollar weakness. Okay, we've had dollar weakness, and we've had euro strength, and we've also had sterling strength. This is the sterling dollar on the weekly chart. You can see that it's just been in a nice uptrend for most of 2017, despite all the Brexit shenanigans. All right, what we've had is a real case of dollar weakness, you know, with an element of sterling strength. But you can see it just you know, respected that trend line beautifully on the weekly chart. A bit like the euro and the dollar, in the same way the euro pushed to new highs, all right, and the dollar pushed to new lows, the sterling has pushed to new highs here as well. That's we've had that off the sort of the last few days. We can see that there. But very much like that DAX trade, very much like that euro trade. What I wanted on, I had to sort of get the trade on there this morning, because this morning we had UK CPI numbers, all right, which were pretty much standard. But once again, we've had a nice strong move up, all right. We've had a little bit of a double top there, and as the sort of the low of that double top has broken, that's where I'm short. Okay, so short around about the kind of 137.60 area. My stop's about the 138.10 area. My target is down here in front of that recent resistance becoming support there, so it's about 136.60. That's given me about just over 2 to 1, maybe 2.2 reward to risk ratio. For those of you who love your fibs, okay, if I can just string that from the highs to the lows. My target's just in front of the resistance and the 50 kind of level there, so it's a sort of a natural target. I'll be interested to see how price responds to the 50 period moving average. If it gets beneath and holds it, okay, and then the 50 goes from being support to resistance, that gives me more confidence in the trade. So there you go, a little bit of a swift overview of what we looked at last week, how that picture builds in terms of the setup that we saw on the DAX, the moves we've seen on the dollar index, how that's played through on the euro dollar, and then also we can see here as pulling it into a trade on the pound against the dollar. So I hope that gives you a little bit of idea, a little bit of insight. I know there's always one or two little questions, so if I don't know if Jens wants to sort of ask them, or I can sort of try and pick them up and read them, and we can have a little chat.
Let's also take a look to the Dow Jones. Better short today is a question of one join us here in the webinar. So let's take a look to the Dow, please.
Okay, sure. Let's bring up the Dow here. Okay, let's show all here. Let's have a Dow chart. Here we go. Well, it's it's just been quite amazing, hasn't it, ladies and gentlemen? When you look at the Dow and in terms of what has actually happened with it, what it's what we've seen there. Let's move to the wiki. I mean, you can see that yourself there. Okay, we can just see that. Looking at the weekly chart, that has been one-way traffic. Okay, and the thing that as an experienced trader, the thing that kind of excites me, and also I have to say alarms me a little bit, is that invariably sort of the price has been the sort of the rate of climb, the rate it's moving at is actually accelerating. It's almost as if it's going into sort of a parabolic climb there. But the important thing is we've seen 26,000 broken there. Okay, it moved from 25 to 26,000. exceptionally swiftly, okay, and the chart is sort of talking. You can see that chart is going one way at the moment. So I appreciate the question was, should we be shorting that today? When I look at that chart, there is nothing there telling me to short that chart at the moment. Okay, there's nothing there telling me to short that chart. Okay, there's still an immense amount of strength there. Okay, whether it be right or wrong, whether you have beliefs about whether this can go as high and as fast as it is, the reality is you have to trade what you see. And what I see there at the moment is price is still pushing. It's not giving me any real sort of intraday sort of reversal signal at the moment from what I see there. Nothing really. Okay, perhaps maybe a small on the 15-minute chart building. But if there's one thing I could pass to traders is that when you have strong weekly and daily charts like that, and the 4-hour I'll bet is the same, right? It's unlikely to reverse off a 5-minute chart. Okay, it's unlikely to sort of put in its top, because think about it in terms of energy. There's so much sort of momentum and energy behind that move that it will take a sort of a few little kind of almost false reversals to sap the energy out of the move before it might consider rolling over. So at the moment, it's been moving nicely. As I look at that chart there at the moment, there is nothing there to tell me to short this market at the moment, Jens. So if that might disappoint people who are looking to do that, but the reality is, when there's a strong trend like that, you don't want to be fighting. Don't want to be fighting a very strong trend like that. I hope that helps.
Today is the day of the index, so another wish is the FTSE, please.
Okay, yep. Let's bring up the FTSE here. Okay. Okay. Here we go. Well, here we go. That's the 4-hour chart, but let's look at it on the weekly. As always, whenever I'm just looking at a chart for the first time, I forgot to mention I also have fractals on here, which is just a very simple indicator you can use. You can find it there. It's under the Bill Williams there, fractals, all right? And I like to use it because it gives me a good sign, a sense of where there are particular levels of supply and demand, support and resistance. But let's look at the FTSE here, okay? FTSE broke out, okay? It started this year, it finished last year on its highs, breaking to new highs, and I suppose the difference I would sort of mention about the FTSE is, for those of you not in the UK, we've had the sort of collapse of a FTSE company, Carillion, which was involved in kind of lots of what they call PFI deals in the UK. It was an awful lot of government money and government contracts, and that kind of that went into sort of into kind of like liquidation over the last couple of days. It's collapsed. It looks like from this morning, from what I'm hearing, is that once again the government's going to step in and bail it out, which basically means the taxpayers are going to be paying for it as well. So that is going to cause a little bit of nervousness in the FTSE, and if I'm honest, I'm a little bit surprised to see that we haven't had more of a clearer move there from that. Okay, I suspect there's probably been a little bit of what's the word? A little bit of sort of just people holding back until they find out what the real situation was with Carillion, and also what was the government going to do. And we've actually seen a little bit of a move there. Okay, a little bit of a push there. Is that from the government sort of hinting they're going to bail them out? Perhaps it's you'd need to wait and see, but at the moment I just see that as that's going a little bit sideways for me, Jens, at the moment. Okay, I don't see that as a particular buy or sell at the moment. I see that for this week it's going sideways. It's filled its gap, and I think over the next day or two, as that kind of, let's say, the government's response to Carillion becomes hardened, that will give us an indication of what we're likely to see, because invariably if Carillion was allowed to fail, well, there's lots of small contractors, small businesses that would also have a knock-on effect. So there's it has a sort of like a domino effect throughout the economy. So at the moment, I would be keeping my powder dry on the FTSE at the moment, Jens.
All right, that's our webinar for today. It's short and quick and smart. Thank you for now. And if you like to see it again, a couple of hours later, it will be available on our YouTube channel. And tomorrow is another day. Tomorrow it will be Mike's day. Thank you. Have a good trade or have good trades, and hopefully see and hear you tomorrow. Thanks. Goodbye from Berlin.